Good evening, and thank you for joining us at the House Hunting and Hacking Group, where we're unlocking the power of real estate together. We're excited to have you with us on the second and fourth Tuesdays of each month at 7 p.m. Mountain Time. Tonight, we will be talking about ADUs, and our group tonight will be Genevieve Henderson, who is our loan specialist, and she'll be our presenter tonight. We also have John Nichols, who is our realtor, and I am Amber Zamudio, your insurance specialist, and we are your house hunting and hacking admins. We are talking about accessory dwelling units, ADUs, which is the ultimate house hack. And again, Jen Henderson is our presenter, and I will be your moderator. Please let me know if there are any questions. Jen, take away.
Thank you, Amber. I'm going to switch over to a different PowerPoint. So I'm going to stop sharing for just a second while I get this other one switched over for our topic tonight. All right. Okay. All right, hopefully you guys can see that.
Yep, we've got it pulled up.
Perfect. All right, so this is accessory dwelling units, ADUs, the ultimate house hack. I'm very excited to be presenting on this topic, as I think it is going to be very important moving forward in the real estate market, given the prices and the rates and just the overall situation we're in nationally in the market. I think ADUs are going to play a huge important role. And I am your presenter, Genevieve Henderson. I'm a mortgage broker at Equity First Financial. I have, my background is in a Bachelor of Science in Business Administration, and I worked as a paralegal in the past, and I've been a licensed loan officer now for 6.5 years. What has happened since I'm a mortgage broker? I'm going to talk about the lending guideline changes. On October the 16th of 2023, FHA changed their underwriting guidelines to allow for rental income from an ADU, because in the past they haven't allowed that. And so these changes are outlined in their mortgagee letter 2023-17, if you want to Google that. And then since that time, we've also had, from the conventional side, we've had Fannie Mae and Freddie Mac. So Fannie Mae now allows ADU rental income on their Home Ready product. They also have another product called Homestyle, which is for creating ADUs. It's like a renovation loan, but it tags off of Home Ready. So you actually have to be qualified to do a Home Ready loan in order to do the Homestyle renovating, in order to finance the creation of ADUs. Freddie Mac allows it as well, and they have also their Choice Renovations loan for creating ADUs. VA allows this, but is very restrictive. And like, this is a snapshot of like the VA rules and guidelines that they have on here, where they're like wanting 2 years of experience and 6 months of reserves. And I just don't see this being as probable. So I'm going to stick with the more probable situation in this presentation, where we're going to be talking about purchasing a property that has an ADU, and using either FHA or a conventional loan. So we're gonna go with like the most probable situation, not the little caveats where we can go running off on other trails. In addition, I did check, USDA does not currently allow ADU rental income. So sorry to disappoint anybody there. And actually, I know we just skipped a slide, so I'm gonna go back. Nope. Oh, I guess not. So another big thing in changes that have come is government. So this was a bill that was submitted and approved by the governor on May 13th regarding accessory dwelling units. And it's not, some of these things, like you'll see there's a big date in there, June 30th, 2025. So these things that they're like gearing up local counties, municipalities, jurisdictions to get ready for these things. But I can tell you, like right now, what this is doing is it's going to be causing these municipalities and counties and stuff to address and get ready that this is the future. Since he's already approved this for the state of Colorado anyway, in trying to encourage accessory dwelling units. They know we have a housing supply shortage. They know they have a lot of people who can't afford, even if they could get a house, they can't afford it. They can't qualify. And so they're trying to solve that problem by encouraging accessory dwelling units. And they're doing that in multiple ways. Through these different sections of the bill that they're addressing. They're talking about lowering the fees for, getting approval to construct ADUs. They're talking about even doing like grants and things. But those like really detailed things aren't actually going to go into effect as they state until like June 30th of 2025. And since that's a whole year away. We're going to talk about the here and now. And then when those things get rolled out in more detail, we can come back and revisit this with what they're offering with it when it comes to grants. I will say it repeats over and over again that like this is the grants and things that are coming are going to be eligible for low and moderate income. So don't I wouldn't recommend holding out for those things. But
Jen, if
sorry?
you want to check really quickly, there was someone that's been interacting with me on another platform. I'm not sure if they're trying to get in.
I don't show any
Okay.
participants.
Sorry to interrupt. There was somebody that said he was trying to get in, so I'll just keep interacting with them.
Oh, okay. Do you need to send him a link?
Yes, I will do that.
Okay. Are you able to pull it up on Meetup and just share, copy and paste it? Cool. And I will keep a lookout for him.
Sounds good.
So, yeah, so these are some exciting things that are, coming out to encourage ADUs that I'll love to readdress once they have more of the structure in place. Because right now, in the front of this bill, it's talking about, if you meet the criteria of a certain amount of population and whatever, you can submit yourself as, a potential county where we will work with you in this grant program that we're developing, knowing that you're going to be ADU friendly. But again, those things are in the future, but overall it's good because it's pushing us in the right direction of ADUs. So what is an ADU? An ADU refers to a single habitable living unit with means of separate ingress, that means like entrance, and egress, exit, that meets the minimum requirements for a living unit. And we will go into detail about that. An ADU is a private space that is subordinate in size and can be added to, created within, or detached from a primary one-unit single-family dwelling, which together constitutes a single interest in real estate. That part is important, because if it's not, it's considered a separate unit, and that can cause you to have a hit on your interest rate. So it's really awesome that they've designed this with the understanding that it is still a single interest in real estate by having an ADU. That doesn't automatically make it a 2-unit situation. So a single family residential 1-unit property with a single ADU remains a 1-unit property. For any single family residential property with 2 or more units, a separate additional dwelling unit must be considered as an additional unit. So that's also kind of important if you end up running into that scenario, that you definitely want to check with your lender, because that could cause something to be ineligible. Because if you get over 4 units, it's no longer residential. So anyways, just a little offshoot there. So what is considered rental income? The mortgagee must add the net subject property rental income to the borrower's gross income to calculate effective income. The mortgagee may not reduce the borrower's total mortgage payment by the net subject property rental income. There's a reason for that, because the way you apply the rental income, whether you apply it on top of somebody's income or you reduce a mortgage payment, a liability, that ends up having a much different impact on the calculation of the debt to income ratio, which is what we use as lenders. So they specified that the mortgagee must verify and document the proposed rental income from the ADU by obtaining a Fannie Mae Form 1004, which is really just an appraisal document, or the Freddie Mac Form 70, the URAR, and a Fannie Mae Form 1007. And the Freddie Mac Form 1000 is that form is a single family comparable rent schedule. So you will have to have an appraiser come up with a rent schedule looking at comps in the area, to come up with a computable number. Because again, in this situation, we're talking about purchases. We're not talking about a refinance. In a refinance situation, we could sooner look at the guidelines on those and probably use like your current lease agreement and things like that to compute the rent schedule. But in a purchase situation, sorry, I have very loud hummingbirds in case that's coming through. We have in this situation where it's a purchase, so you don't have a lease to go off of in most cases, and you're going to need to get an appraisal with a rent schedule in order to compute. And showing the fair market rent and, if available, the prospective leases. So how is the rent? How is it calculated? We may consider rent and rental income from existing and prospective renters if documented in accordance with the following requirements. The rental income from the subject property may be considered effective income when the property is or will be a 1-unit dwelling with an ADU. And so it needs to, so when it's saying will be a 1-unit dwelling, that's in the situation, meaning like, maybe it doesn't meet the requirements for it now, in which case the context of that allowance is actually speaking to like a renovation loan, which is a possibility. But otherwise, if you're looking to just do a regular conventional or an FHA loan, you're looking at the property currently is in a situation where the ADU is in place, meets all of those requirements. To calculate the effective income from the subject property where the borrower does not have a history of rental income from the subject property since the previous tax filing, we must use 75% of the lesser of. So 75% is pretty standard for like even investment calculations. The 50% here, 50% if a 203K, the 203K is the standard FHA renovation loan. So if you're doing a renovation loan with FHA, then they're only going to take 50% of this possible rental income. Use the fair market rent reported by the appraiser, or the rent reflected in the lease agreement. The amount of the rental income from an ADU used as effective income must not exceed 30% of the total monthly effective income used to qualify the borrower. So what does that look like? Here's an example. Borrower's job income is $4,300 that we're using on this loan application. And the rental income from the ADU is estimated at $1,700. So we can use 75% of the estimated rental income. So that's 1,275, 75% of 1,700. And this is less than 30% because 30% of 4,300 on the job income is 1,290 of the effective income from his job. So this can be used and now makes his loan application income now $5,575 a month. That is a nice boost.
Yeah,
So what are the lending requirements for an ADU? It includes a kitchen. It includes a bathroom. It includes a separate entrance. Now, on this particular slide showing includes a kitchen, the kitchen does not have to look like that. I'll get into a little more detail later. It depends on the loan product. And we have someone, I think, joining us named Kai. So let me add him in. All right, Kai, thanks for joining us. I hope you we're in the middle of our presentation, so I'm going to continue going, but if you have any questions, please feel free to ask or type it in the chat. So what are the lending requirements also for an ADU? It's independent of the primary dwelling unit, and it must be smaller in size than the primary dwelling unit's finished area, and that contributes less to the value of the property than the primary dwelling unit. And back to that VA loan that we were talking about, that one was even specifying that like it can't exceed more than like 25% of the total square footage or value in the computation. So like if you're talking about a full-size walkout basement, for example, you know, if that's the ADU that you're thinking about using, how is that going to only be 25% and qualify for the VA for using ADU rental income and meeting their restrictive requirement of it only being 25% of the value of a home? I would think a basement would probably be worth more than that, especially if it was equipped with all the features of an ADU. So that's why we're focusing on that conventional and the FHA. So here we go with them all side by side. I tried to highlight some specifics for each of them. So, I mean, obviously, if you only qualify for FHA based on credit score or whatever, then you just need to focus on what are the requirements for the ADU for that particular loan product. But if you have options, you might want to work with your lender and your realtor in that way, because, for example, Freddie Mac doesn't require a bedroom. It could actually be a studio apartment with Freddie Mac. And then with Fannie, there's a specific, they want a kitchen must have a countertop and cabinets and running water and a stove or a stove hookup. Whereas if you come over here to the FHA, it's stating that the kitchen must include a sink with potable running water and a stove utility hookup. So those are really different, like, you know, as far as the setup that you might be entering into when you're shopping around and looking for something that meets the potential requirements of an ADU, in that, you know, does it have a separate bedroom? No, but it's got a full kitchen. It's got a full bathroom. Well, then you probably want to go with the Freddie Mac product if you qualify for that. Does it actually have a stove? No, but it needs to have at least that stove utility hookup. And I have researched that pretty extensively. That does require, like, you know, the higher end The higher voltage, it can't just be the 120. It's got to be like a 240 volt stove, because that's what stoves require. So they want at least that hookup there. The actual appliance doesn't have to be there in order for FHA. And it sounds like you might be able to get away with that with Fannie Mae, but Fannie Mae is also going to require cabinets and a countertop. But they all have, like, you know, very similar other things in common, like, you know, the ingress and the egress, the entrance and the exit. And that the, you know, access to the ADU cannot only be through the primary dwelling, it actually has to have its own entrance and exit capability. There are additional things that I'm not including in this presentation because it's another whole ball of wax. But there are capabilities to have a manufactured home be on your property as an ADU that is allowed in some of these products. But moving on. So additional
I have a comment on.
requirements though for.
I'm sorry, Jen, can I make a comment on that?
Oh, go ahead.
If you
Yeah.
have a primary residence that is a standard home and you add an ADU that is a manufactured home, you would have to take a separate policy for your insurance that would be compatible to meet the requirements for a manufactured home, because most primary home policies do not insure manufactured homes. So then you would also need to consider the insurance, requirements when it comes to something like that.
Wow, thanks for that, putting that in. If it's something like this, that's something on top of the garage, does that require a separate policy?
That would not.
Okay. If it's a tiny house.
It depends on how many square feet it is, but traditionally a tiny house would not be. So like a cottage house or tiny house, something like that can be insured as an other structure. You would just calculate that in the replacement cost of the other structure. The reason why a manufactured home wouldn't be is because the type of construction that it is.
Very nice. So glad you interjected with that. Those are good to know. So additional requirements from the lending perspective is for FHA, they're going to require 2 months of PITI is just principal, interest, taxes, insurance. So 2 months of the monthly mortgage payment in reserves, meaning it's just sitting there. It could be from a 401k, as long as you have liquid access to pull that out. We just have to show that you have that there. For Freddie Mac, they're going to require either 1 year of landlord experience, having been a landlord, and I by that I don't mean you've had a renter in your primary home. It's going to be a little more official. Or you can take a landlord education class. So I'm glad that they're flexible in that way. I think that's really great. I really like Freddie Mac. So on average, when you're adding an ADU to a property, it can increase the overall value by 20 to 30%. All right. So getting back here, so if the property is worth 450,000, when you buy it without an ADU, it could be worth 540,000 to 585,000 once you officially add the ADU. Which I'm like, wow, talk about some serious sweat equity. And then in addition, obviously, you know, the benefits of having that income, if you desire to buy and hold that property. But that's my contact information. So does anybody have any questions about ADUs or what we just talked about, or other things that you thought about maybe in your industry that you think would pertain, that'd be important?
I think that was a great presentation, Jen, and I think it really does add a lot of value to people's properties when they have the ADU. I have seen a lot of clients who have had their primary residence where they had done short-term rentals out of their primary residence and saw such a benefit in doing it that they decided to turn their primary residence into a more of a rental property and get an ADU in their above their garage, or turn their garage into an actual ADU, and live in there and kind of do it that way. So it's been a very profitable situation for those clients, and they've had great success in that. And by doing it that way, they can just add it onto their primary homeowners insurance because of the way they've got it set up. And it's not costing them that much more because they're only adding the other structure coverage instead of carrying a secondary policy for the rental property.
Nice. Yeah, I think I remember Billy
Yeah.
I think was doing his garage. Did that work out well for him?
It did, yeah. And he does that, and he was the first person I had the experience of going through that with. And anytime it's a new experience for me, I'm always like really nervous, and I call underwriting, and then I talk to somebody, and I take a lot of notes, and then I hang up and I call underwriting again and talk to somebody else just to make sure it was right.
Wow.
And because it makes me nervous when it's something new like that I've never done, and because it's so circumstantial, and you don't see those kind of circumstances a lot. And yeah, it was very easy to do. It was very inexpensive, and yeah, it was a great way for him to do it. And it was surprisingly inexpensive. It was very affordable for him to make that change. And yeah, it really worked out great for him.
Yeah, I was saying earlier before we started the recording, I think this will be very popular for mother-in-law situations, for house hacking, and doing it as a multi-generational home, as we have, the two generations trying to figure out, okay, if let's say the kids are still alive, dad passed, mom is living in a big home, they need to figure out what to do. They don't want mom to go to a facility. She's not ready to go for a facility, or even if she would need that care, she would rather do it at home. But being in that larger home is not really an option. So the two things we could do to get her to still live in a home environment and then get her the home-based care would be to have her downsize into a smaller home. Or what a lot of families are doing is they are buying one bigger home that has clear delineation, basically an ADU kind of thing, or a walkout basement, or something where there's quite a bit of separation. So I think these kind of arrangements are going to become more and more popular.
Absolutely. I mean, the ability to market that you have a mother-in-law suite, I mean, who doesn't want that? That's like the freaking dream house, because whether it's renting it out or having it there for guests, or having it as a place for your teenager, or or having it for you. And as a person, a lot of people now are working from home as a retreat like that, separate away. I mean, super duper valuable if you can have that onto your property.
Yep, absolutely.
If you're going to be using it, like from an insurance standpoint, if you're going to use it, like whether you're going to have it for guests or have it be for your mother-in-law more long-term, or where does the division happen in insurance where, okay, you need to have a different conversation with your insurance carrier? Is it, if it's an Airbnb or a long-term rental, like that's in one category that you need to have a special conversation? And if it's family or a guest suite or whatever, then that's different.
Yeah, absolutely. So you want to have a conversation in all of those circumstances. So if it's family, you would want to have your family members, traditionally, you would want to have your family members take out their own renter's policy. And the reason for that is because typically, if you're over the age of 26, you would be considered, even though you're family, you would be considered your own dependent. So you wouldn't be dependent on that primary named insured unless you had, a physical or mental dependency on the named insured. So if it was like your mother who had dementia or something like that, and you were their primary caregiver, that'd be a little bit different than if, you were rooming or just, there is a roommate or boarder with somebody in that kind of different capacity. If you had somebody who was doing short-term rental, you would want to have a home share endorsement where you're having the ability to do the short-term rental and reducing your liability and property damage exposure that way. And if you're renting out on a long-term basis, then you would need to add, in that case, you would probably want to do something more like a landlord policy on something like that. So it really just kind of depends on how you're renting it out. But there are within each policy on a primary homeowner's policy, there are certain endorsements that you can add in most cases for all of those circumstances, whether it's on a primary homeowner's policy, adding an additional non-owner resident or something like that, or the home share endorsement, or adding certain coverages that meet the criteria for whatever way you're renting it.
Very nice. Anything
Yeah.
from a realtor from that perspective?
No, I think I chimed in about just how useful it would be. It kind of makes it a Swiss Army knife because there's just so many different ways that you can use this. And even if you're a young person and you're house hacking, someday the resale value, as you mentioned, the value goes up, but it could be again marketed as that Swiss Army knife kind of house, or the ability to do the ADU for the multi-generational setup. The one house flip that I was mentioning earlier before the recording here in Broomfield, they bought it and they've created, it's going to be a ranch, 3-bedroom, 2-bath ranch, and then a separate ADU that could be perfect for an elderly person. And then they're in a home environment, their family is near them, they can get the home-based care they want, and in many cases a lot of wealth stays in the family.
Yeah. Well, since that concludes, I guess, our topic for this evening, I will let Amber close us out on our slide.
Great. Well, thank you so much for joining us. We will be meeting next on Tuesday, the 9th of July at 7 p.m. It will be an insurance related topic, and I will be your presenter. It will be at 7 p.m. on the 9th, Tuesday, July 9th. Can't believe it already. Whew. The link will be up on Meetup, and it will be a new link, so please do be sure to check it out on Meetup. You can reference this meeting on our YouTube channel at House Hunting Hacking. You can also find us on Facebook, and we really appreciate you guys being here and look forward to seeing you the next time.
So much, and nice seeing all of you, and I'll end the recording. Have a great evening.
Bye.